Hi everyone, welcome to my 3 worst stock market mistakes that I've made. These were more from when I was a beginner. I might do a video on the 3 worst stocks I've bought at some point. That's a good video. But today I'm talking about the 3 worst mistakes I've made as a beginner, and hopefully a few people will learn from this. If you're starting in the stock market, if you've been doing it for a while, you've probably have done these as well. So this is what I learned when I was a beginner. My first biggest mistake that I made is I did not buy on dips. I kind of always watched the stock and it went up loads. I was like, wow, this is amazing, it's up 10%. What I'll do now is I'll go buy some more shares, and I'd buy it when it's just gone up 10%, and what would happen the next day is it would go down back to 4%, like on the stock price, and then I'd be massively down on that position and my main position, which basically meant I was down quite a bit, which didn't really work out. So it wasn't until like a couple of months after actually stock market trading, I was like, I always go up loads and then I'm losing loads of money after that. And I was like, alright, so what I'm going to do now is I'm going to buy, when it goes up loads, that's really good. And then when it dips, then go buy the actual stock price. And for ages, I kind of just wasted money not going in at lower prices. So that was one mistake that I made quite often. My number 2 mistake was probably a problem that I have because I live in England. Even though I only invest in the New York Stock Exchange now, that is after a lot of experience. For a while I started off investing in the London Stock Exchange, and this brings me to my second point, which is know the economy you're investing in. Now, when I started investing in the London Stock Exchange, I did keep my eye on a lot of the New York Stock Exchange stocks, so like Google, Amazon, and I was watching them all going up, and I was watching a lot of at the time I was in the United Kingdom economy wasn't growing loads, and a while after we started getting like Brexit, and our economy wasn't growing massive. And I was kind of looking at all these stocks going, how are these stocks all going up? And a lot of my stocks aren't going up at all. And then I was like, oh, look at the economy difference in America right now. Every single stock's going up. In the United Kingdom, nothing was growing. So it's good to know the economy, which economy is growing, and try buy stocks in the economy that's doing well. Even if it's not your country, try get to know it. Like a lot of Chinese stocks potentially at the moment would be something great to look at, and the amount of growth that they're doing at the moment is something great to the American economy, whereas the economy that I'm currently in, which was the one that I basically went to straight away, wasn't the best one because it hardly didn't make any money. I was kind of like in the UK Stock Exchange for like 6 months, and I pretty much walked away with probably about 5% return. My first 6 months in the New York Stock Exchange, I was walking away with nearly like triple my return, which was unbelievable. So it is a big massive difference about knowing which economy and how your economy is doing, and how the other economies are working right at that time. My number 3, and I think a lot of people when they're brand new to the stock market will find this hard, and that's not knowing when to sell, and when to sell when you're winning. You see a stock that you're in, and you're kind of like, oh, it's gone up this much, maybe it's going to go up even more, and you just don't know when to sell. Next thing you know, it dipped. And I kind of had this with Square a little bit back. I still kind of make these mistakes, I'll be honest about it. And Square went up loads, and I probably should have sold at 48, and I ended up selling at 43, which was $5 difference. When I kind of saw the dip coming, and I was like, oh, it is dipping now, I'll get out of it. And I could have took it $5 higher. I didn't. At the end of the day, we write it off. It was a good profit, but I could have gone out a little bit earlier. And when I was thinking about going out early because of the gain, it was like a crazy 4 days in that stock, and I knew I should have exited, but I didn't. So yes, knowing when to get out of the stock is definitely one, so you can get the maximum profits. A tip that I would get to avoid this is basically when you invest in stock, every month just review it, write a stock price down, which at the start of the month you would be happy to take, and when you check a month later, if it's at that price you sell it, if not you keep it. And then also, it might be there, it might not be, but also just review it and have a look and say, right, does the last quarter report kind of say, right, I actually move this figure up now because I think it can get higher than what it is? That's something always to be looking at. You can stay in a company, have a sell figure and then actually update it because of the numbers that we're pulling out. At the same time, you might think, right, that's the figure, I'm going to stick to that figure and just go with that. That's always something that I do just to help myself. So I know where I was at a month ago, and I kind of just don't have a greedy head on and think, oh yeah, keep this one rolling. Obviously, try and get the maximum profit as you can. So those are my kind of 3 mistakes that I made that did cause me a problem when I started investing in the stock market. Let me know what yours are in the comments. Give the video a like, and I'll see you on the next video.